Good morning, traders. It is Thursday, August 29th. Taking a look at the charts, we got the SP 500. This is the 30-minute chart on the left, regular trading hours only, so we're not seeing the 24-hour clock. And on the right-hand side is the daily chart showing the futures 24-hour chart, so you get the full view on the daily look. Now, overall, if we just look at the markets, another big update today. We're continuing to trade in this huge range where the market is just chopping around. It seems to be a never-ending stream of bullish tweets and then bearish tweets. And today was another tweet with China talking about they're going to come back to the table and about the um, trade war that's going on between Trump and them. More or less a big pop in the markets, up a dollar or sorry, a percent this morning. But we are going to gap up into more or less resistance. If we look on this 30-minute chart, we're trading right now at around 17, so somewhere right about here, which means we're going to have a big gap window in price. Maybe the price will continue to run up into the opening bell, but we are going to gap right into resistance. And this red hashtag, which is hard to see right there, that if the market does pop and run all the way up there, that'll be an extreme overbought territory where sellers are likely to step back in. But overall, you got to know this is a news-based pop. Typically, moves that happen on news fizzle back out. So the fact that the market is actually going to gap up and it's on news, gaps tend to get filled in the indexes, and news-based pops usually fizzle out. So I would expect over the next session or two, we see something very similar to this. We had a big pullback, some type of pause or pullback going forward after today. So we'll see it. It's not huge volume today. Most of the move, the percent up this morning, happened in one 10-minute bar. It was just a news-based pop, computers, algorithms jumping in, driving price up. So I would expect we're going to still struggle at resistance and not so much breakout just yet. But until we break out of this range, when you look on the right-hand chart, until we break out of this range, we are range bound and it is chopping around. The bias is still down. If you look at these bars here, they're red, which means bias, sentiment, selling pressure, all that stuff, cycles are pointing down still. So we are hoping for a breakdown in price to go down and test these May, June lows here and potentially go even further. Now, if we take a look over at, let's move over to bonds. Yesterday, bonds had a nice push up in the morning. I was talking about potentially starting to pull off some of that position. It got pretty close to our first target, and it's starting to move down a bit today. Obviously, if money is rotating into equities, we're going to see bonds, money come out of bonds as a safe haven play and move in. But overall, bonds are still holding up fairly well. And believe it or not, metals are actually positive again today, even though the stock market is rallying. So there's a little bit of a disconnect. I am feeling like we're really close to well, we are close to a huge turning point in the market. And the big question is, which way is everything going to break? And we could see bonds rocket higher and metals. But if the stock market breaks to the upside, we are going to see the safe havens fizzle out and sell down in a very big way, which is why we've got fairly limited exposure to the market here, because it is a little bit of a crapshoot and it's going to be a huge move. We don't want to be caught on the wrong side with a big position. It's better to take low risk trades and hit a bunch of 1 and 2 base hits than try and hit a grand slam and either make a ton or lose a ton. So it's all about keeping our money and growing it slowly. So let's let's take a look over at gold today. Just focus here on the daily chart, but gold in this nice upward trend, continuing to ride this 5-day moving average. It's consolidating. Again, just letting it kind of mature, do its thing. We're looking for a new entry point in metals, and at this point we are in bonds, which is outperforming gold still. So we're kind of playing the safe haven play without being in metals at the moment. If we look at silver, silver really popping again this morning. It's pushing up this blue line. Talked about it yesterday. It's a very significant resistance area in the market. If we take a look at our trend chart, let's just zoom in a little bit here. You can see this red hashtag. Red hashtag here means the market is getting extremely overbought. Right now, silver is trading equivalent to up here. So we are going to gap above this overbought territory. You can see on the daily chart is also a significant resistance on the chart. So I would expect some selling to potentially step into silver. It's had a very strong pop, and it's into some levels now where it's just run too far too fast. There's going to be people stepping in to lock in gains and people to move out of positions with resistance being right there. So I'm looking for a pause or pullback for us to potentially get back into the metal sector, either in silver, gold, or miners. Looking over at natural gas, we are long natural gas. It had a nice move up yesterday. This morning in pre-market, it was down a little bit, starting to move up. We are struggling with a downward trend line in the market. Let's just draw a couple lines on here. We've got more or less this falling down trend line, and we've got several candle wicks through here. So more or less, we got a fairly significant resistance zone. It really kind of goes all the way up to the top of this bar. We've got this range, we got this here, this spike high being fairly significant, another pivot high right here, and then of course a pivot high here, and all these pivot lows through here. So if it can pop and break this down trend line, we're going to move up to this next level around this 232 area. Could act as resistance, but it is very close to reversing its trend and starting to move up and having a pop and a break. Our short-term analysis has gone from a red downtrend to now we are in the very early stages of an uptrend. It hasn't broken a previous pivot high yet, but our momentum analysis and cycles are pointing to higher prices, and we could be in on the ground floor for a fairly significant run that goes way beyond the twos and goes all the way up to the threes in due time. Looking over at crude, up 0.7%. It is flirting with a resistance trend line as well. If we just draw across these highs here, it is flirting with these previous highs, starting to break out and hold up. It has yet to break this previous high or this previous high, but again, it is trying to put in a bottom here. It's at a run, a pullback, and it's pushing back up here. Overall, we are looking at it trying to build a base. But if it doesn't break out here soon, I think we could see it go back down and sell off, and that would create a little bit of a drop in the energy sector ETF and set up a potential for a new leg higher eventually. I feel as though this is a strong pattern that is starting to build, but I still think we're a little ways away from a big pop and a breakout to the upside. Anyways, that's really it for today, and I'll talk to you in a little bit. At 10:30 this morning, we've got the economic news coming out for natural gas inventory. So expect some big volatility today in natural gas, and we'll see which way it shakes out. Hopefully it'll be in our favor, but either way, we have the momentum and the buying on our side. So even if it is against us, we should see support fall into place and hold price relatively well over the next couple of days. And the underlying trend, which is up, should continue to take place. That's it for now. Talk to you in a bit. Bye-bye.